after the bell today, just a few moments. Joining us now for a preview is CFRA Senior Analyst Garrett Nelson. Garrett, so we know the deliveries, they pretty much came in line. What do you expect to see from the numbers, the margins and the profits and revenue that could drive the stock?
Yeah, thanks for having me. We're a little bit more concerned about Tesla's quarterly results this time. I mean, they have a good track record. You know, they beat 10 of the last 11 quarters, but Q2 presented some unique challenges that we think are really going to weigh on their bottom line. So we're at $1.48 for the quarter. The consensus is $1.80. And the reason we're at $1.48 is the impact of COVID on their Shanghai factory, as well as startup costs related to the two new factories, one in Austin and the other in Berlin. We think are really going to weigh on their bottom line. But more important than the quarter, we think, is their outlook for the year. We know they ended Q2 on a strong note. Their June production was the strongest in company history. So we think investors will be looking for more signs that that momentum is going to carry over to stronger volumes in the second half of the year.
But do you expect that to happen? Because if so, would you be a buyer on the stock, even if you do expect for bad news today, because some of that news is dependent on the Shanghai factory, which hopefully should reopen?
We are buyers, and we think if there's a weak headline number, you could have a pullback in the stock after hours, and that would be a really good buying opportunity. I mean, the stock's already down about 30% year to date, so we put out a report a few weeks ago looking at the long-term opportunity, and whether Tesla reports a beat or miss, or however the earnings release ends up, however the stock reacts to it, we think investors will do very well looking ahead a year, 3 years, 5 years down the road by buying Tesla around these levels.
There's also the macro environment, which I'm sure will come up on the call, and just whether so far Tesla has seen more demand than supply, but whether the demand picture is changing. Garrett also just wanted to run by a headline, a report just this hour that Ford Motors preparing to cut as many as 8,000 jobs in the coming weeks as it tries to boost profits to fund its push into the EV market. That's a Bloomberg report citing people familiar. Does that come as a surprise? Are we going to see more layoffs in the auto industry?
We do see more layoffs coming. So that's about 4% of Ford's global workforce. You've seen Elon Musk already come out and announce some job cuts. But you're going to see more of that from traditional auto manufacturers as they pivot more jobs to their EV businesses. So and they certainly want to get ahead of the competition, as far as cutting jobs if we do have a recession. And U.S. auto sales were down 20% in the second quarter. So all signs show that demand is certainly pulled back.
Got it, Garrett. Thank you very much.